Hi traders, Dale Pinkert here. ECB and Mario Draghi today created a range. Every once in a while in the markets, you're going to have a range that's going to be directional should it be able to close above it. So we had the high today into the ECB in the euro. The high was 112.87, currently trading 77. After that, we sold off to support that I talked about the other day, right there at this 123.17, where the market turned good. So we're compressing in this range between the high and the low. And the next move out of it, as I said, I'd go with closes over 113, could extend this move up towards the 114 level, and then action and moves back under today's low, which was 112.29. So call it 112.30, and we're going to see new lows. So we have a defined range trade setting up here. My bias is that we could come out to the upside. Still think the Dixie was sold off after the ECB. Rallied to 97.20 or so, closing at 96.90. That's my view on euro. I want to look at USD CAD, which is also very sensitive to the movements in crude. And normally, when crude is going up, USD CAD is going down, and crude is now looking at possibly the $65 range. I still am expecting a significant high here in crude. And if that's the case, with Canada not being able to take out the lows from back on March 19th, it's pretty positive action considering how strong the crude oil market has been. So I'm watching this Canadian dollar for potential buying opportunity, and closes back over this 134 level should trigger that. We could get a retest if the dollar weakens of this 132.60 level, but I am pretty impressed with the way the USD CAD is holding up despite extremely strong prices on the crude spot market. And I wanted to wrap it up with the yen. I was bearish last week. We had a pretty nice sell off from the 111.80 level. We've currently pulled back. And if you just look left, and that's something that we have to do as traders because the market has a memory, and the memory is to your left. Back in the March time frame, you had a low before the low to 109.80, right around this level at the 110.60, 110.80. That could be called a left shoulder, with the low that we had on the 25th being the head, rally back to the neckline at 1183. It's my contention that we could be carving out a right shoulder here. That means we should not take out last week's lows of 109.80 unless we really have some type of major risk off move. It looks to me like the yen could be putting in a right shoulder of a head and shoulders bottom, which would project back towards the 112.80 level, which a lot of people on longer time frames would turn very constructive. Good hunting. This is Dale Pinkert. Remember, don't just count your pips, count your blessings. Talk to you tomorrow.